Welcome. It's the Southern Fried Finance Podcast, where your hosts, Vic and Mike, will cover a host of topics related to small business taxes. They'll also touch on an occasional baseball topic, some college football talk in season, and maybe some out. And obviously, we'll talk about the best fishing spots and our best barbecue joints we've found lately. But it's a tax issue, y'all. So sit back, grab something to drink, and get comfortable, and join us for the Southern Fried Finance Podcast. And here's your hosts.
Hey Vic, how you
Vic and
doing?
Mike.
It's Mike Ferris and Vic Rouse here for another episode of the Southern Fried Finance Podcast. Today we're going to talk a little bit about something that I think is probably interesting to a lot of folks. We're going to deal with hobby losses and what's not and what might be a hobby. So Vic, how you doing today?
Doing great. I think just about got all our stuff ready for Christmas. Looking forward to having kids at home and all those types of things, and doing year-end planning with clients the same way you are. So getting to talk to lots of different people every day and talk about things maybe what we need to do before the end of the year. But hobby losses are kind of interesting, and I think since the Tax Cut and Jobs Act passed back in 2017, it's become even more important to determine whether something is a trade or business or a hobby, because the punitive nature of or punitive tax treatment of expenses related to a hobby.
Yeah,
Can you
and I hadn't
tell us a
even
little bit
thought
more
of
about
that
that, Mike?
aspect of it. And you mentioned that when we were getting ready for this, and I didn't really clue in at first, but the crux is if it's not a business, it's not appropriate to put it on Schedule C, so it's just other income. And then since TCJA came around, there's no place to put the deductions, right? That's just kind of unfortunate.
Yeah, hobby expenses were deemed to be a miscellaneous itemized deduction, and now those things are not deductible anymore.
Right,
So you
right.
wind up paying tax on all of the income and not deducting any of the expenses if you've got a hobby.
Yeah.
So how do we have a trade or business and not a hobby, I guess
Right. That's the
is
catch,
the
right? So
question.
we really want to try to counsel people to do the things that can make them become a trade or business. And in some cases, it may not be possible. In other cases, it may just require that you pay a little more attention to a few things and be able to meet some tests that you're, keeping books and records, for example. The IRS under Section 183 has given us regulations that contain, I think it's a 9-point test that outlines what can make you be a trade or business. And a lot of it's the things that you might expect. But at the end of the day, if you act like a business, you probably are. If you're not keeping any books and records and you really don't have a business plan, you're not trying to market yourself in any cohesive, manner, then you're probably not a business, and even if you think you might be, it'd be hard to meet the test under the IRS rules. So, have you ever got into those much with clients?
Um, Not too often. I think my dad many years ago was representing a client. It was a farmer in an IRS audit, and the IRS was trying to assert that his farm was a hobby, and he raised tobacco. He was a tobacco farmer. And my dad kind of looked at him, looked at the agent and said, "Are you crazy? Nobody is tobacco farming except to make a profit. You have no idea how much work this really is." And
It
dad
is
did
hard work.
prevail. Dad and the client did prevail in the case. But a lot of the hobby loss cases relate to horse farming.
Yeah.
Um, and
It lends
it
itself to the profile, right? We've typically got somebody with a lot of income. They might really enjoy horses and equestrian affairs, but there's a lot of expenses associated with horses,
yeah, yeah, yeah,
and they
yeah.
don't make much money. They're
Not
not profitable,
usually.
but
Not
every now and then.
usually. I think if you go look at some of the court cases related to these things, it seems a lot of them turn on the things that you would expect. Did the taxpayer have a business plan? Were they trying to make a profit? Did they have a plan to make a profit? And sometimes the profit could be in appreciation of the asset and
Real
not
estate.
just in, generating free cash flow from the operation of the business. But they've got to have some kind of plan to make some money somewhere
Right.
and be doing the things that a business person would do to try to make a profit.
Yeah, that part about the assets going up, that's number 4 in the regulations in the IRS test. So, one of the factors they point to is, does the activity you're engaged in have a significant recreational value to you as a person? So, somebody that might be an avid fisherman might be inclined to get some people to pitch in some money on the boat and go maybe go out in the rivers and go fishing, and you might have some income after your friends reimburse you for your expenses. Are you in business or are you in a hobby? And that's kind of a
Well,
silly example, but it kind of illustrates where this can kind of fall. You've all of a sudden got income.
right. I think you do have
Or the guitarist that puts out a tip jar of buskin and picks up 25, $30 and
I know some folks that fish that do some tournament fishing and they're
so there
very
you can have some
serious about
winnings.
trying to win. They're very serious about trying to win. Now, are they in the trader business of professional fishing or not? Um, I think,
Maybe, maybe not.
yeah, if you do the things that might lend itself to that, then maybe you can get there. And obviously, you have to allocate your personal use assets. You have an allocation between your personal
Oh
use
gosh, yeah, that's a whole nother.
hours, days, or
That's a
whatever.
nightmare to deal with.
It'd be listed property, I suppose, um, but that's sort of a different topic. It's like, are we engaged in this for the purpose of turning a profit?
Yeah.
Are we trying to? And potentially you could be, but
Yeah, I was working on I was working with a client a couple years ago that's got a little retail store, and it's in a kind of a tourist destination type area. There's a lake nearby, there's golf courses, and he's got a little retail store to support bicycles and golfing. And he's losing money consistently, and there is an IRS rule, and this comes up. Clients ask me, there's an IRS position that says if you have, and it's in the code actually, if you have a 3-year period of losses, we're going to presume that you're not in business. And that's a rebuttable presumption. So if the question come up, you get a chance to respond, and you have to show them, I've got a business plan. I have kept a general ledger. I have paid sales taxes. I'm registered with the state withholding offices and all the things that business. I've got ads running on Facebook Marketplace on a regular schedule. I'm doing these things. And after I sat down and talked with this gentleman, at first I was very skeptical, just looking at the surface. But when we talked about it, he explained his approach, how the market is so seasonal, and everything that goes into what he's trying to present to the marketplace. I'm like, you actually are in business, and it's very clear that you are. And I think one of the takeaways from that 3-year rule is that you're not required to be successful. You're just required to try hard. And so you don't have
right.
to have a profit after 3 years. It'd be nice if you did, of course. You should be trying to, but just because you don't is not in and of itself, a determinative answer of no, you're not in business. It just makes it a little tougher to defend, I think.
Can you go through the 9 factors that the IRS looks at?
Yeah. So I'll have to refer to my notes a little bit here. So, the first one is the manner in which the taxpayer carries on the activity. Do you carry on the activity in a business-like manner and maintain books and records? So, do you look like a
Right.
business? The expertise of the taxpayer are his advisors. Is this something that you are naturally knowledgeable in? Is this a skill set that you possess of yourself? The tobacco farmer knew how to farm tobacco.
Right.
If I was to go start a tobacco farm, I would have to learn how to farm tobacco first. And
Right.
so that,
Right.
so it's not something I'm good at. I do tax returns, and that's something I've got a lot of expertise in. So nobody, not many people do tax returns as a hobby either, though. So.
I would think it would be about as likely as farming tobacco, but
The time and efforts that's spent by the taxpayer carrying on the activity, how significant is this activity in your day-to-day life? Do you have another full-time job that demands 50 hours a week and you piddle with this activity 2 or 3 hours on Saturday afternoon? That might look like a hobby. Do you spend a significant amount of time in the evenings and weekends when you're not at your full-time job, or is this almost a full-time job for you? My retail guy with the little store, it's almost his full-time job, even though it's kind of seasonal. So,
yeah.
And this is one you mentioned, the expectation that assets may go up in value. So if you've got land that you use in your farm, you might have an expectation that land's going to go up, and your farm is really designed as a stewardship activity over that property.
Okay.
So there's a lot of things there. The success the taxpayer has had in carrying out similar or dissimilar activities. The fact that you've done this in the past might indicate that you're doing it again with the intent to make a profit.
Okay.
The taxpayer's history of income or losses, series of losses during the startup phase, is not necessarily indication that it's not a business, but it's something you got to overcome.
Sure.
Number 7, the amount of occasional profits, if any, which are earned. So the amount of profits in relation to the losses and the relation to the amount of the taxpayer's investment to the value of assets, it kind of gets to the significance of it, right?
Right. Right. The horse farmer that has a nominal amount of profit in one year, that might not be indicative of being engaged in a profit motive. But if they sell a star jumping horse or something and
Right.
at a large profit every occasionally, then that would be.
Exactly. The financial status of the taxpayer. The fact that the taxpayer doesn't have substantial income from somewhere else is an indicator that this activity is engaged in with a desire to make a profit.
Okay.
And I've got a couple of folks with this profile where we've got one spouse that's got a fairly strong amount of income from a good corporate job or something like that nature. And then the other spouse, has what might look like a hobby because it doesn't create much income, and maybe they don't spend a significant amount of time in it.
Like they're a musician or a professional fisherman or something.
Right. Like,
Okay.
Something here in town here, you've got a lot of people in that position that have a retail store downtown. And, but they've rented a store. They've got merchandise on the shelf. They
Yeah.
better have a business plan,
Right.
So that might look like a hobby because it's not required to support the household. But if they're approaching it in a business-like manner, it probably does qualify as a business. So
Right.
that little test could be a little bit nuanced. The last one, the elements of personal pleasure or recreation. So, I'm a hobby musician. I pick around with a guitar and try to write a song every now and then, play with it, and have a lot of fun with it. If I got paid, for a weekend gig at a restaurant or playing at a bar, I'm probably still not a professional musician because I would have enjoyed that activity and I probably would have done it for free.
Yeah.
But I'm not going to get to write off my cost of lessons and guitar strings. So
I think it's important that these tests are not bright line tests. You kind of look
Yeah.
at them taken as a whole. It shouldn't foul you if you enjoy the activity.
By itself, that's not a
foul
killer.
you. It's not a killer, but I mean, it just gives evidence to the fact that maybe you're not in it to make a profit, or you
It's
don't
another
have a
factor.
profit motive.
We've kind of got a column here we got check marks in the good column, check marks in the bad column. And if we get done with these 9 tests, we need to have at least 5 or 6 check marks in the good column.
Right.
You can still enjoy what you're doing. And, we're not required to have drudgery for income,
Thank goodness. Thank
Right.
goodness.
Right.
But it seems to me like the meeting with professional advisors, having good books and records, having a general ledger, having a business plan. If you're not making any money, trying to make adjustments to figure out how to make money. It seems like those
Yeah, some
types of things.
experimentation in your processes and your
it-
marketing efforts. That indicates you're trying to do something different.
and just having some documentation and an approach to it, like a business person, um, seems to be would be the overriding factor
Yeah,
in whether you've got something that's a trader business where we get to deduct our expenses, that are ordinary and necessary, uh, as opposed to a hobby where we don't get to deduct the expenses at
any
all.
of it, any of it. Yeah. It's an interesting area. I don't know that I've ever had a client that we decided this is a hobby. Might have been in the mix, but we've never really seen that come up. We've had some that might be kind of in this gray area, but based on the factors, I think we probably got legitimate businesses. But it's worth
Right.
talking about. I think that's the key is we need to make sure people are aware of these things, and if they are not doing some of the things they should be doing, we need to coach them and counsel them on how to kind of rectify that.
Right. And it's always more fun to make a little bit of money anyway.
Right,
So,
right,
right. I mean,
right. That's the goal.
it should be easy to figure out a plan to try to figure out how to make some money doing something that we like to do anyway.
Exactly. So,
So
so what else? I think we covered that pretty well.
I think we covered that pretty well. I think we covered it pretty well.
Y'all
You
ready
got
for
any big,
Christmas?
getting close, getting ready to go do a little fishing here before the end of the year, and maybe do a little duck hunting too. So
Oh, there you go.
kind of excited about that.
Hey, you were telling me about that. So,
Yeah,
yeah.
yeah.
We're
So
we're just kind of hang around the house the next few days and be kind of quiet and calm and roll into the holidays with some peace and quiet around for a little bit and
that
get
sounds great.
relaxed and be ready to hit the ground running.
Sounds great.
All
All
right,
right.
man. We'll see you around. Take care.
I'll see you around. Merry Christmas, Mike.
Merry Christmas, Big. See you.
Well, thanks for joining us, everybody. This has been an episode of Southern Fried Finance, produced by Michael F. Ferris, CPA LLC. Vic and Mike really thank you for being here and hope you can join us again next time.